Hello, everyone. I hope everyone's having a good morning. And as you can tell by the title, today we're going to be tape reading Tuesday, August 20. Keep in mind, today is a no news Tuesday, so it will mostly be tape reading unless we see something that lines up with our outlook that we outlined on a previous video. And if you haven't watched that video and you're watching this live stream, I recommend that you click off and you go on to watch the outlook, because today's tape read is going to be in the bigger comprehensive scope of trading towards the weekly drop. So I want to take your attention on yesterday's price action, which was Monday, August 19, Monday, August 19. And you can see we traded towards or through the buy side level that we had highlighted on the outlook. And I want to move into some of the higher time frame intraday price action yesterday and how we were able to deliver through the high. So if you remember, I had spoken about a array that was lying in between a intermediate term high highlighted here, and I also had a array highlighted, which was this small hourly fair value gap here. So I had the idea that this high that was within this gap, either it gets taken and then we inverse the gap and we trade towards the buy side level, or we respect this gap here and respect this level as a buy side sweep and we start to drop lower. What happened was very interesting, because we ignored these two scenarios and we created a scenario that I did not have in mind until it really happened. So the scenario that ended up happening was basically this inversion that happened to this gap here, which lied within this intermediate term high. It happened during a very odd time, and I think in these cases we're able to put aside inversions and arrays that are either being respected or disrespected, and waiting for a viable time to where the price delivery algorithm is able to run more efficiently. And the way that it was able to run more efficiently yesterday was with utilizing the unique opening gap. So you can recognize a pattern that happened here. Notice the first run lower into it during overnight, then a second push, filling it a second time, and then using it as a efficient price range to deliver us higher towards the buy side drop. The thing that I wanted to note is how we first filled it, had a slight moment where we were using it as a efficient price range with this wick here. When I first saw this reaction happening overnight, I thought that we might start respecting this unique opening gap as an efficient price range and to start dropping lower and treating this high being taken as a liquidity sweep, especially with this low here being taken, this run lower being taken here. I really expected this to hold. What I had failed to realize is that on the 15-minute, we were also moving into an array. What happened here as well, notice how we fill it again, fail to go back higher towards the buy side. We drop lower once more, back into this array on the left side of the chart. We have a first drop lower, and then if we drop onto the 1-minute chart, scroll back in time. There. Notice after the first mitigation, which happened at 9:30, we had a run higher or run lower and run higher. And then I finally run lower, which took this low as a liquidity sweep, giving us that breakout framework. And then we started to really shoot higher, filling the gap once more, but then coming back later on around lunch hour to use it as a efficient price range to push us even higher, delivering us to the buy side level. That was the main kind of framework that happened for yesterday. But for today, what we're going to be focusing on is this new day opening gap, as well as a 4-hour volume imbalance, which we are currently pushing through right now. Now, my drawn liquidity or bias still lies as this breakaway gap here. I still believe that we're going to push higher into it. A matter of when is what's going to be difficult for me because I don't have any perspective on where we can draw into. And the only place where I can see it retracing into before we start to move higher is a mitigation block here and possibly a discount of this range. But then again, that would mean that Tuesday would be a retracement day. And obviously I believe that the weekly manipulation has already happened, we might not go back that lower to give us a second manipulation. But if we do, it's viable and it can happen in the larger scope of things. But for my drawn liquidity, I feel like if we did have an urgency to reach through it and into the breakaway gap, we would have not found resistance off of this new day opening gap. Let's drop into our time frame. I want to draw a couple of things here. Oops. What is this? Me to do that. Let's make it red, orange. So notice the high that we had punched in yesterday at 10 p.m. was right around here. Overnight today went higher, pushed through it, filling the new day opening gap. I want to draw on a consequent encroachment level action. Where is Tuesday's closing time? Okay. So I want to keep note. I want to draw this as an actual level. Short ones before the video. Just bear with me. So I want to notice how the bodies are respecting the consequent encroachment level with high precision on the 4-hour time frame, especially on the 1 hour, not so much. But I want to bring your attention towards this high being taken here. The previous day high always being ran in scenarios where we'd want to see bullish price action as the previous day high is taken. I would have liked to see this not be performed as a secondary manipulation and just be performed as a intermediate term high being closed above and being ran through. That's what would have been ideal, but since that didn't happen, there could be a scenario where we go back higher and market maker buy model with this high. Now, the part where I'm not so sure on is what could be a point of interception to where we stop delivering the sell side of the curve and start with the buy side. In both cases, the retracement would have to be pretty deep. I'll go on the 4-hour time frame because it's more clear that way. But even so, we are a good distance away from discount. And expecting price to deliver to this price level here and then creating a market maker buy model, I think would be demanding too much of price. And if we do reach towards the discount level, then we'd have to postpone the delivery, which I was expecting today, towards the premium breakaway gap for yesterday. To yesterday, sorry. So it's something that I want to keep in mind, that the retracement is not the highest probability. But yeah, I want to hop onto the 15-minute time frame. And if you could just give me 1 second. Sorry about that, everyone. We're back. So what I was saying here on the 15-minute time frame is that with this sweep, the delivery overnight honestly had good movement. So expecting too much from AM and AM especially is, I think, asking too much from price. So in my opinion, overnight was the real move. If you were looking for a move lower as a retracement, I think you would have had your trade of the day within overnight. Notice this second sweep inside of the newly opening gap and low resistance here. With anticipating this move here to become a breaker, you would have had your secondaries delivery off of the breaker here within this tap. And also, I'm pretty sure there's a volume imbalance here. Price trades into a small volume imbalance right here. See that? That's high precision. And that's why going into the AM session, I'll be looking for in what direction does market manipulate. Does it manipulate higher or lower? And I'll be paying attention towards the opening range gap. And I'll be seeing if price wants to manipulate to levels that are that are steep, or if it wants to just stay in its place and not do much at 9:30 and have a move later on today. But I want to note a mitigation range here that's 15 minutes, which is not the most prominent range, but it is a range. And you can see we are floating in discount of the range and not really doing much. So yeah, I'm stuck in a conspiracy whether we want to drop lower or if we want to have a market maker buy model today with this high. But I think overall, within the days, we're gonna get a market maker buy model. Um, but yeah, it's not the best framework that price is giving me to work with. But it's something. Let's take a look at the YM liquidity. What's going on here? Something I'm noticing is that the YM and the Nasdaq have been really in sync lately. So that's something to keep in mind. But notice how the Nasdaq is dropping with more aggression than the YM is. There's low resistance near those. Yesterday's 3 p.m. low has not been breached yet. And same thing on the Nasdaq. Stop there. So while we're waiting for the 9:30 opening range, I want to touch on the topic of a bit of, psychology. Going into today, pre-market, before doing this live stream, I had many thoughts that are hard to explain, but are clear when you feel them. And I'm sure that many people feel the same way whenever they go on a day when the previous day was a big day and they either lost money or they weren't able to participate in a trade where they would have hypothetically profited. So, as you guys know, yesterday was a Monday with no news, and obviously I didn't trade that day, as many people did. Now, when I went to do the daily review to check on the day and check what were the main moves, what was the framework that occurred yesterday, it came to my attention that there were 2 times where my framework showed up and it resulted into a profitable trade. And for some reason, this gave me a hint of a bunch of emotions and a conundrum of thoughts and feelings. And I think that it's mainly because of my fear of missing out. It's the fear of missing out that drives you to do things that you would otherwise not do if you were alive and awake in the moment. Many stupid accidents and many stupid decisions come from saying, well, what if the thing I don't do works out? What if the thing I don't do doesn't work out? When sometimes you have to listen to your gut. Sometimes you need to not question yourself and not question your abilities. And you need to have faith in what you're doing. The feeling of missing out on trades yesterday on a Monday with no news, I know in my mind that avoiding that day was probably the best decision I could have made yesterday. Not going onto the chart and not scouting for trades on no news Monday is first of all a bad habit builder. And second of all, it's what an uninformed, unknowledgeable infant would do when they would first start trading as a mistake. And I would like to believe that I'm not so much of an infant within this field, but it gets to you. It 100% gets to you. When you see that you missed out on a day where you would have been profitable, you're, if you're a human, which we all are, I hope, we seek the next day to fill this void of disappointment, or to fill this void of, I guess you could call it, what's the word for it? This void of missing out, this void of not achieving anything, this jealous or envious feeling of other people that would have traded on their day, and whether they would have lost or won, that wouldn't matter to you in a position of your pride being let down. In these situations where you're feeling complex emotions and you're feeling like you have to trade the next day or you will miss out on the next best day, is a killer in trade. It's best to avoid these situations, to recognize them, to take note of them, and best of all, do not encourage them. The scary thing about price action is that once you start making up scenarios and you start deceiving your brain into seeing stuff in price action that you do not really see, that are not there physically, price is not printing the way that you're seeing it. The scary part about this is that your brain will mold price action in a way where it pleases you. It will mold price action into a way where you see it and it tells you we're free to trade now, right now. There's a setup, you can take it. And the sad part is whether, let's say you take that trade and granted you lose it, you have a moment of self-reflection and discouragement, which I saw in a young man that I was watching yesterday on YouTube. He was reviewing his day trade where he took dumb losses and he spilled out all of his emotions on video. And I can say that I am not a professional in this, but I understand what he's going through, what he's going through, and I know these steps that he could take towards leaving these feelings out and focusing on building the skill. Because once the discouragement gets to you and you don't have a person in your life that can guide you and tell you what's wrong and what's right, and tell you to keep on going, keep pushing through, this is normal, it can lead you to take decisions that would have not been taken if you would have had that guidance. So it was just something to put out there. And yeah, so wanna notice price moving into this gap right here. I wanna see how price reacts off of this count of this level and this negation drop here. Price moving into this would be significant. And I would like to see whether we respect the negation block or we have a subterranean events, which leads us to have a shifting order flow, which I do not see a true reason why we would have that. But if we do have it, then we would disrespect this mediation block and keep moving higher. If we don't and we remain bearish, then this will probably lead us to a mirror range low. Go to 5-minute time frame. Notice this gap here, moving into the order block. And into the fair value gap. So there we go. Just put that one on the top. So you can see prices moving heavily towards discount level, and it might reach the price zone within this IO Fed and possibly take out the high as a market structure shift and keep pushing through it. And I did not realize this is the 9:30 move, so I'll jump on the ready trade now very quickly. Go to the 1-minute chart. Let's label out the opening range gap. So 414 is close. This open. Let's make a nice color. That's nice. So notice 9:30 immediately goes and pushes higher and fills the opening range gap. And if you go back into the 5-minute chart, you can see that this may act as manipulation into this counter intermediation block and into this fair value gap here. So you see we're pushing through right now. We're seeing some hesitation within the high. Let's see how this move plays. We're seeing some pushes lower. I want to note this as a sweep of liquidity, and I want to see how price reacts off the lower time. So stops. I notice the reluctance that price has when breaching the high. If it closes above it, so that's, I want to take off my sweep of liquidity right there, embracing the higher fat gap. I want to see the higher time frame. I want to put on my crosshair and check if there's a small gap right there. If there is. So with this small gap right here, I want to see how price holds up within there. So it's now starting to push lower. I want to draw it out. Hope this chart doesn't get too messy. Okay, so price is seeing some pushes lower, but we can never anticipate something too early. So I want to see how price closes within 9 minutes. I want to put that back on 5 minutes strictly because that's just annoying. So opening range gap was filled. I want to see if price begins to use that as a support level. And if it starts doing that, then that would be in my favor. I would like to see this low resistance here run. You see all of this low resistance. I'll note London high right there. So we're tapping into that small gap right there right now, off of that 15-minute reaction. See, we're respecting the gap, so we have 200 ways, but I wouldn't be surprised if price either does this big one lower and takes it and mitigates his volume imbalance as well. But it's always up for review. Jump on the 5 minute. See what's going on here. Note this order block. There's a order block. It's minus 12, 10. So pushing through it again. And versus right there. Looking to see how this up close candle holds, because if it does hold, then that would tell me there is a shift in market order flow, and we're going to be seeing lower prices. But you can see we're pushing it pretty heavily, unless we have created that as a big wick and return down here below the consequent equivalent of order block, then that deems as disrespected, and this inversion will not see. And that's not surprising considering how small it is. So notice how we are starting to use the opening range gap as a support level. Still too early to say, because look at that reaction that we had. A big push away from it, but then we have so it's never too early and it's never too late to try and anticipate what price does. Because you see this push higher here. If it was respected, then this inversion here would have probably played out. But you can see price started to accumulate a bit, and it's not. It's indecisive to where it wants to go. It's between a premium order block and it's between the support of this opening range gap. So 5 minute wise, it's not looking too bearish. 15-minute wise, it is looking bearish, and we're also back to this order block as well here, which had price. Oh no, sorry, it was just being negated right now. Check the hourly time frame, see what's doing. Had that big negative rebalance. 30 minutes, 30-minute time frame, we've been floating within this gap here, which I want to draw out. You see this way. So notice the rejection of the CE aligning with the 15-minute gap. Actually, I want to stretch that out to just discount the range, so make it a little bigger to where it ends and stops. So check the 15-minute, check where it ends with discount. Right there. Okay. So we have a small gap right there on the 30 minutes. So I want to see how price reacts within it. So we're very much decisive right now in between the order block, the wick, and the 30-minute gap, and premium, and an inverse volume imbalance. I'm pretty sure. Oh no, we're respecting the volume imbalance actually. 1 before hours. So That's actually very interesting. Just notice how we're respecting the volume imbalance that we were just a couple of seconds ago pushing through very heavily. So yeah, that's something definitely I want to take note of, how we're respecting the volume imbalance. Um, and we're finding support off of this gap here, and we have a kind of push higher, taking out the accumulation high, pushing through the order block and pushing to the 30-minute gap. You can see we're having a delivery higher. We have a small gap here, should be in the way of all of this low resistance liquidity. So I want to draw this one here. Draw trend line liquidity. Okay, 15 minutes. I want to, no, 30 minutes. I want to take off the wick. I want to take off that gap. No, I'll keep on the open range gap. But notice how after we tapped into the discount of the range, you can see that we violently we pushed back higher, leaving the volume imbalance not close through and deeming it as respected. And how after we filled the opening range gap, we started using it as support. I want to note there is sell side here. So if this fair value gap that we had within here gets disrespected, you can expect this to be an A and D. But if it does get respected, then this is just an accumulation, expansion, retracement, and another expansion towards the trend line liquidity. But wouldn't be surprised if we push back higher last second and then close. We're like, okay. So note smaller volume imbalance here. See how price reacts within that. Completely. We're back within the version. Check it 2 minutes, 3 minutes, 5 minutes, 1 minute. Okay, so same price seems to be holding volume imbalance. It seems to be pushing up pretty violently. But yeah, what I want to see for high price action is just this gap here being inversed, and that will confirm a market maker buy model towards the high there, and back at the opening gap low. So a pretty violent reaction and the volume imbalance here, hence at even a higher prices, like an urgency to push higher. I want to take note of the wick as well as the reduction block that was here that's being currently pushed through. It's finding lots of resistance at the fair value gap. So that's something that you definitely want to notice. Okay, so it's pushing back within there, closes bearish. Now, price action is very exciting, and I have to say so. It's moving really quickly. Okay, so pushing through right now. We took some of the trend line liquidity, but the top target has not been met. So yeah, just keep on watching. Oh, I just turned off my display by accident. Sorry. We should leave it now. Trend line is nice. Inverse gap. Might consider taking it, but seems that we're finding lots of resistance off of it and also resistance off the wick. But you see how we took the high there, and we had that. Sorry, getting a bit tired. We had that big drop lower. That might be pricing and wants to make a breaker to the lower side. But we're still seeing resistance and a drive to push towards the gap there. And this gap, it's been holding price for a while now. Still failing to close above the rejection block and above the wick of the CE, and now we can drag out to the bigger one here. But there, see, we're finding lots of resistance off it. Right there. Okay, pushing through it now. That's telling me there's lots of energy within there. Pushing through it, we're pushing through it. Okay, so we took all the trend line liquidity. That has all been taken. The premium order block being pushed through. Traditional order flow entry drill being disrespected. And we still have used the opening range gap as support to deliver that move higher. And the 4-hour time frame is showing tremendous respect towards the volume imbalance. And I want to take note of something actually here. That's actually very interesting. I want to mark that as a sweep, and I want to drop on the bit and make that thing. Let's see from what low was that actually. What is that? Oh, sorry. Did not need to do that. This one, 59. This one, 24. So now, if you drop at the 15-minute, yeah. So this, as you can see, is a second sweep. That's nice. I'll move this range here because the range condition is being completely pushed through. I want to drop, actually I want to make this way more cleaner because it's just so ugly. Trading hours, and I want to know it. Gap, low, take that off, it's just so distracting. Trading hours. So we're back in the opening gap, which we once were, and was once to use as support. So I want to see how price reacts within here. And I draw liquidity. Oh, sorry. I draw liquidity which I want to see traded into has been now breached, which was the trend line liquidity and also the newly opening gap. So it doesn't give me much space to have a trade towards drawn liquidity. But it's whatever, I don't really mind. Oh, this is really blinding. I don't know what I'm doing. I wanna change this color. Make it orange. Text orange, as well as this one here. Get orange. Hop on the 15-minute time frame. 2, 1, 2. Want to mark out also midnight. They're on 12, so lots of leverage on right now. Leverage on right now, but I wanna go back on the 1 minute, and I wanna also notice how we tap back into the inversion, which we noted towards the trendline liquidity. I wanna also delete this as well. Big displacement off of just tapping back into the opening range gap and having that second sweep of the volume imbalance, which I'm very surprised on how we ended up respecting it so violently. I think it's more clear on the 1 hour. So there will be a 4 hour volume imbalance within this price range here. You can see how we drop lower here, sweep it, and we also end up respecting it on the 4 hour, which was surprising to see because when I first got onto the charts, I saw it all the way down here, and I was saying, oh, okay, we're probably gonna want to see a retracement lower. And if you wind back on the video, I was saying, okay, we're not seeing much urgency to deliver from this volume imbalance, so we might see a discount array getting tapped into, but that wasn't the case because I was assuming that price was going to inverse this volume imbalance. But what did it end up doing? It ended up heavily rejecting off of it within the second sweep here, and we're now engulfing this pole push lower, and I'm interested to see how price plays out, especially going into the consequent encroachment of the new day opening gap. This here. Here as well. Took 2 stabs. Oh no, that doesn't. That's not an IOFEB, excuse me. Filled the entire gap. Just take a look at what's happening on the 5-minute time frame. Seems like it's going to be attacking London's high. Should be interesting to see, but I also want to take off previous day liquidity sweep as well. For anyone new joining on, I can say that there's 2 new viewers. We spoke about when we first started the stream how London was the real play, and anyone looking for a short day, anyone looking for a short day after having a big move higher previous day on Monday would have been profitable taking shorts off of this inversion, this volume imbalance entry towards a short-term discount, which would have been maybe slow or a fair value gap lower, or even this volume imbalance. But I'm definitely liking this reaction higher, and I like this move here. So we accumulated, and this is the opening range gap high, by the way, leading to here, and you can see that price inverse this gap here did not find support off of it, so the inverse gap, giving us a reaper. And then also, you can notice after we had this accumulation, we had this big jump higher, stabbing into the small gap here, also giving this candle a wick. And then we had a trade lower, and I was expecting that this gap here to not be inversed, but you know, in hindsight it did. And if I measure out equilibrium that range, I have no clue why it was inversed, but price seemed to find support off of this gap here, and it started to rally higher, pushing deeper into this low resistance run, giving us that market maker model that we were speaking about earlier towards this trend line. And you can see that we're violently pushing higher now. And yeah, see, we had another fair value gap delivery, and this gap is a BPR with this gap here. So that's a balanced pricing gap. I don't want to see that be traded into. I think it's only higher one. So let's label that as a breakaway. Yeah, so something I'm noticing as well is once we pushed through the consequent encroachment and closed above it, we went down one more time and we found resistance off of the consequent encroachment building in the opening gap, and we're just now about to push into the near the opening gap high. And I want to label London high as a potential buy side liquidity pool. Hello, Asjad Asad. What's your favorite Forex pair? I don't trade Forex, but um, I don't I don't believe that you can say it's stable for IC systematics because I believe that everything, stocks, crypto, um, whatever you can think of, you can apply his concepts to it. But I think the most volatile pair, the pair that is most tradable, sorry, and the pair that has the most volume is probably, I would say, euro versus dollar. I wouldn't trade anything else, but for right now, Forex is horrible, and it's the main reason that I switched over to futures. If you were early viewer on my channel, you would have noticed that I used to trade Forex, but it's been having some problems fundamentally, and it's just better to just make a switch over to futures. It's a much more stable market. It moves much nicer, and it's the best switch I made. But yeah, definitely the euro versus dollar. But I keep my eye out on some forex pairs if I want to swing trade them. Um, but multiple ones. I don't stick to one. But I would recommend if you had to trade a forex pair, the euro versus dollar. So as I was saying, this buy side liquidity pool, uh, have it drawn out. So price makes an equal high, being the opening gap, and then starts to push through lower and fills the breakaway gap. So see. Something price could be trading towards is this kind of the current range. Why? It's because it's an negation range. Look over here, see, go drop into the 1 minute. I wanna make this a little more opaque because it's getting very disturbing. I was saying that it might go lower and hunt this low, but I want to check if there's any S&Ps within that low because that low would be too low for my liking. I think there is actually. Okay, 1 minute. Nope. Check off the YM. Then the YM. Where is below? Well, the YM is not moving in favor or in correlation towards the Nasdaq, so I'm gonna sit on the sidelines until they decide to get back in sync. Also, is likely to this. The NAS 100 is basically the same thing as the EMA Nasdaq, but it does print a little differently. But I think you'd be fine just like if you can't afford the EMA data, I think you could just trade the NAS 100 and you'd be fine. But it does print a little differently, so you have to keep that in mind. Like human trade delayed. Oh yes, you can. You could trade it delayed, but I don't see what would be the point of it. If you're gonna trade the Nasdaq, just buy it. It's like $7 per month, $20 if you add on to the um subscription. But it's worth it. It's definitely worth it. So you can see the Nasdaq and the YM are pretty oppositely moving right now, so I'm not interested in seeing anything happening right now. But once they get back in sync, I'll get back into it. Pop up my Notion really quickly. So while we're waiting for, you know, for price action to sync back with the YM, I want to speak about the topic of patience with trading. So, in my opinion, if you're watching me, I think you're a fully conscious and grown man, and I want to believe that you are, you know, you're conscious and you're able to make your own decisions when you're on the charts. But for many people, and for many people that I see posting videos as market recaps or trade recaps, I noticed that lots of these men are stuck up with their pride and they're stuck up with their feelings that they always have to be right. And I want to touch on why this is possibly the most toxic and the worst personality trait that a human being can have is the trait of believing everyone's wrong and they're right. I think it's a personality disorder. I think it's called superhero or something. If anyone wants to correct me, you can correct me, but I think it's the biggest destroyer, especially in trade. The biggest specialization that it plays into is trading. Lots of people think that they have nothing to learn and that they have learned everything they need to learn, and that when they make a loss, lose conditions, and it's a bad trading day, which, granted, sometimes that could be the case, but more often than not, it's probably not. They aren't following the rules, and when they take a loss, they blame it on something else. And I'm not gonna lie, for some while I was that person. So do not feel ashamed if it feels like I'm speaking to you, but it's the most important to recognize this personality trait, and it's the most important to be able to work against it. And as a person that's developing and growing up to be a mature human being, to becoming an adult, it's important to, at all times, when the time to make a decision is now, to put aside the feelings of emotions and pride, or the feeling of what is this person going to think about, or the feeling of I should have done this or I should have done that. When genuinely in your mind you believe that the only course of action to take within a time segment of your life, when you're faced with a decision, if you take in if you take a decision that you believe genuinely was the only one available, then that's something different. But personally, I know people who take bad, I wouldn't say wrong, I would say bad or ineffective decisions in order to please other people, in order to prove themselves. And it's a reason I want to stop posting trade recaps and stop posting um, daily reviews, because I know this about myself, and it's the most important to notice about yourself is that sometimes naturally as a human you boast about your winners and you stay silent on your losers. And you have to recognize that if you are a person that's likely to do these things, then you're a liar. And you may fool other people and you may convince them that you are a better person than you really are. But when you're laying in bed at night and you're facing a decision where you're working a job or you're going to a school or a college that you don't want to continue in, you're faced in a position where it's either keep lying and keep getting that social rep, or own up to your mistakes, own up to who you are as a human being. And I believe that who you are as a human being never stays stable unless you reach the age of like 40 and the self-image of who you are becomes so engraved to the point where you have too much life experience that nothing else changes it. But some some people, which it's sad to say, it's sad to physically word it. Some people honestly believe that they're flawless. And once you believe you're flawless, then you're unteachable. And once you're unteachable, you're hopeless. Once you're a human who cannot be communicated with, and a person that can't be reasoned with, and a person that can't be told by a higher person to fix your act, pick up your knowledge, do something that you know was correct for you. Because obviously, with every single person, they know what's right and what's wrong. They know what they have to do to achieve specific goals. They have the formula inside their heads of what they need to take in course of action to achieve something. But many people choose to ignore this knowledge and they choose to lie to themselves and to mainly other people that I don't know where to begin. I don't know where to start. I don't know what to do. Can you teach me? And I'm telling you right now, if a person comes to you and begs for this stuff, it's almost guaranteed that they're a waste of your time and they're lying to you and that they don't want to put the work in themselves. Because I will put on I will put on any amount of money, any sum of money that says if a person wants to achieve something, even if they don't know these certain tools or if they don't acquire the knowledge that is required to achieve this goal, if a person wanted it bad enough, if a person believed that it was achievable, they would put the most underlying and the most insignificant amount of effort to be able to achieve what they're trying to achieve. So I think the whole idea of, you know, it's not for me or I can't do it is it's a myth for people who want to whine, for people who don't want to take what they're saying as true words and the truth, the most of all the truth, because we all know what's the truth. Deep inside of you, you know what's the truth. You know what you have to do to achieve what you want to achieve. But the facts are most of us will not admit. So I want to go into the Nasdaq a little bit, and I want to speak about this big drop lower. If we hop onto the 15-minute, you can notice that what did price do? It ran into this rejection block right here, and I had that violent drop lower. So let's label that out as a rejection block. Put that on the right and the bottom. Black, black as well. So once we run into our rejection block, we're having that big, deep either push lower or retrace back into this gap here. And if it wants to go down lower and sweep this low here, let's say this is a first sweep, second sweep, I would allow it to drop down lower and give this thing a third sweep here, just to sweep any underlying liquidity before moving higher and reaching for London's high. But on the premise of a daily candle, it's very much a consolidation candle. It's very much a incisive candle, which is ranging between the opening gap and this 4-hour volume imbalance. So, you know, the same case happening as we had in the morning, where we had that big drop lower here and price was floating like around this candle here. It was floating, it had the same vision of this candle, and I was anticipating it to be close through. But you see, we had that big, sorry, not big, big push higher here, remaining the volume imbalance on inverse and sweeping that low. So, you know, if price wants to go back and sweep another low, that's viable in my opinion. Unless we see big pushes through it, then that would be enough for me to, you know, get off and stay on the sidelines and just watch what price has to do, or what's price gonna do. So notice what's happening right now. The gap that we had marked out just a second ago is being pushed through pretty violently and more than I would like to have pushed through it. I would have liked to see this gap here just be filled quickly and start to deliver higher, but you know that didn't happen. And the delivery from this here, I wouldn't say is the most significant, And I've noticed what you have been saying, as I said. Why do you think price had that big drop lower, in your opinion? What led you to believe that we're gonna have this big drop lower? Hope you're still on. I'm not talking to myself. Price failing to reach that swing low. Could be seeing big drop low. It's always on the table. In a herein model, I don't know what that means. Like, do you want sauce? Sure, sure. I don't know what secret enigma there is, and I'm sure there isn't one. But whatever. What's your sauce? I want to note how when price came up and filled the newly opening gap, it then went and seeked lower and tapped into this newly opening gap low, and then it went back higher and it tapped into the concept encouragement. Notice how it respected the level. It was also overlapping with this gap here and this swing high, which is, as we all know, is the this particular high is a breaker framework. Expect slow here to be engulfed. Well, yes, with what's happening right now, I'm not too sure, honestly. What are the three types of the market maker model? I'm only familiar with the market maker sell model and the market maker buy model. I'm gonna get off in 7 minutes at 10:30. I'm gonna follow up with ICT stream because price is not telling me much. It's very much a consolidation day, and I don't have a clear read, in all honesty. I can predict each expansion. You have base psychology. I'm not sure what you mean by base psychology exactly, but um, I find it hard to believe that you can predict each expansion. So we just ran lower, attacked the sell side here for a third time. It's more like actually. So the first one, sell side hunt, and now we have a second one which we're seeing kind of retreat to, but I'll be looking to how the kind of closes. No, I was just asking that I find it hard to believe that you can predict each expansion, and um, what method would you be using towards it? And I think if you could predict each expansion, then you wouldn't be in my live stream. And I don't mean that in any toxic way or any. I'm not trying to take a shot at you, but I'm just interested in seeing how that would work. And if you could explain it, that would help me a lot. Would you care to share about your system, or is it more of a private thing? Well, good for you, man. As Jad said. You should, if you have a system that can predict each expansion, you should go work for Goldman Sachs. Go back on the 50-minute chart. See, we're not having the reaction that I wanted to from that sweep. However, we might have it now, and the reaction that I would like to see from that sweep, from that third sweep, would be a push higher, inversing mainly this gap here. But note that it's also a breakaway, and it would have been nice if this wick here did not attempt to reach into it after the sweep, and it would have just continued lower. I did not have that wick. But you can see now we're trading back into the breakaway gap even though it's completely biased. But I'm interested to see how it reacts within that gap if there has been any sign that order flow has shifted, because within the second sweep that we had here there was a big sign that order flow shifted, especially with this opening range gap here being used as support and then pushing higher, meeting the new day opening gap and stopping in the direction block. But seeing what's happening right now within this gap here, I'll stay on for a little more, try and see what price does around this gap and draw it out. I definitely don't want to see it be used as a IO Fed. Definitely don't want to see that. Draw on the consequent coach vehicle. What do you mean manual interventions? As Jada said, what does that mean? So, you see after we tap into that gap, we create another smaller gap here. And if we do invert this gap, then that would be the big telltale sign that we're I'm gonna start pushing lower, and if that happens, then I'll get off and I'll just sit on the sidelines and I'll watch, see what happens, and I'm not gonna be planning to pull on. So as we invert that gap, we remove all expectations for this gap to be here, to be inversed, and I expect price to sharp up and lower. So I'm gonna be ending the stream now, and yeah, I hope everyone took something out of today's stream and that someone learned something from my talk, either on psychology or technical, even though nothing much happened technically today. And yeah, that's gonna be it for today's stream. And you can see we're trying to push lower now. Immediate rebalance this gap here. Actually, I wouldn't say that's a permanent immediate rebalance. Yeah, thank you, Ajara said. I appreciate that you like the stream. And yeah, be sure to give me any recommendations for anything that you would like to see today or for the next time. Anything that you would like me to change or adjust or possibly add. And I'll try my best to fit it for you guys. Yeah, but for now, we're going to be ending the stream. Hope everyone has a good trading day. And yeah, I'll see you guys on the next video or on the next stream.